Sandra, your bankruptcy recovery expert. Today we're going to talk about a lot of topics. I received a lot of emails, so I'm going to post a lot of topics regarding those emails. And I have a little cheat sheet, so I'm going to go down the list. We're going to talk about down payment versus low rate, which one you should actually spend your money on. We're going to talk about home-based financing for your home-based business. We're going to talk about due diligence, how to look for those great deals. We're also going to cover whether or not you should use an agent when buying a home. We're going to go over owner's title insurance, what that actually is, how it protects you. We're going to cover hazard insurance, the best deductibles to use. We're also going to cover how to negotiate for the best deal. That plays into making sure that you have the proper information. We're also going to cover buying new construction, so that you know what deal to look for when you're buying from a builder. And the last item we're going to cover today is prepare for success. Okay? So let's talk about the first topic. And I ran some numbers for you. Down payment versus low rate. Let me give you some inside information. A lot of people may not know this, but usually when people try to consider whether or not they're going to put more money down, they're thinking that the more money they put down, the lower their payment. Well, that's not always the best use of your money. To give you an example, if you are going to be putting down 20% on a $100,000 deal, which is $20,000, then that's a good buy, simply for the fact that you're avoiding what's called mortgage insurance. Mortgage insurance is a protection for the lender, that if God forbid you get foreclosed on or something happens to the house, the lender's guaranteed to get paid. Okay, so that's why you put down 20%. That's a good deal in any market. However, if you're the average American working hard for your money, you don't have 20% to put down on any deal. Then you want to take a look at what you really need to be prepared for. Right now, the down payment on FHA is 3.5%. And on a conventional loan, it's roughly about 5%. FHA is considering to go to 5% just in light of the mortgage crisis. The lower your credit score, the higher your down payment might be. They're still negotiating and it has to go to a vote. So anyway, in light of that information, I thought I would show you what the truth is about the numbers, because numbers simply do not lie. Rule of thumb to go by is if you're deciding whether or not to put more money down and your reserves are not as high as you would like them to be, then you need to think about the most effective use of your money. If you increase your down payment, roughly you're only reducing your payment by $7 per thousand. That's not really good odds. And in that respect, you really need to look at buying your rate down. Okay? You save more money on a payment when you buy your rate down. So let me give you practical application. If you have a $100,000 house and you're doing a conventional loan, having to put down 5%, which is $5,000, that means you're financing $95,000. And if your rate is 5.75%, right now rates are a little bit lower than that, then we're going to use, let's say, homeowners or hazard insurance is going to be $500 a year. And your taxes are about $1,200 a year on a $100,000 property, just to make numbers easy. That means that at $95,000 financed at 5.75% interest rate, you're looking at a principal and interest payment of $554.39. And total payment with your taxes and insurance is $696.06. Now, if you take that same scenario and like you're contemplating, you decide to put down another $5,000, thinking you're going to reduce your payment even more. Now you're looking at a $100,000 home that you've put down $10,000, and you're financing $90,000 at 5.75%. So now your principal and interest payment is $525.22, and your P&I, your total PITI payment with hazard insurance and taxes is $668.88. So between the $5,000 you put down the first time and the $10,000 you're putting down to lower your loan to $90,000, you really only saved yourself $30 a month. That's not effective use of your money. For that same example, you could have actually taken the basic scenario of a conventional loan, put down your $5,000 where you're financing $95,000, and you ask your loan officer what it costs to buy your rate down to 4.75%. That's just 1 percentage point. Depending on the market, you might be lucky enough to get 1 discount point. A discount point represents 1% of your total loan amount. So in this case, if your loan amount is $95,000, 1% of that is $950. So for $950, if it only costs 1 discount point to get a 4.75 interest rate, that's a wise use of your money. So now that you spent $950 as opposed to another $5,000 on a down payment, now you're looking at a 4.75% interest rate on a $95,000 loan. Your principal and interest is $495.56. And your PITI, which is with your hazard insurance and taxes included, total payment is $637.23. Now for $950, you saved $58.83 from the original payment of $696.06. That's effective use of your money. The same scenario with $10,000. If you just definitely want to put down $10,000 and you finance $90,000, you're still going to have mortgage insurance in that, so the number is going to be a little higher than what I'm giving you. But just hypothetically, on 4.75% interest rate that you bought down for $900 now, because it's 1% of the $90,000, you're looking at a principal and interest payment of $469.48, PITI with taxes and insurance $611.15. That's a savings of $84.91. That's just a small example to show you run the numbers. You can run them yourself. You can have your loan officer run them. Just be well informed. Spend your money wisely. Don't break your reserves. Don't borrow money you don't have to borrow from family as gifts or what have you. Just make sure that you get the best deal possible for your money, that you get the best interest rate, and if it's possible to buy it down, that is always a good deal. Don't just throw money at a loan at a large down payment. Okay? I got that question a lot this week, and I wanted to make sure I addressed it so people understand how to stretch their dollars, especially in this current economy. I look forward to talking to you again on the next topic. Thank you for visiting Free Info Just for You. Have a wonderful day.